A warm welcome to Business Daily right here on Trust Television. I am Yusuf Akogu. Let's take the business top stories. Now we turn our attention to the stock market and give you highlights of the stock trading as it went down on Tuesday on the floor of the Nigerian stock market. The market closed in the negative territory yesterday, 0.17%. The equity loss there to close there at 66,984.62 basis points on the day. 257.423 million volume of shares, value at 7.799 billion, and the deals of 6,498 exchange hands among investors on Tuesday. Look at the gainers, the top gaining equities. Of course, Mark Nichols gained 10%, the highest gainer of the day, to close at 66 kobo per share. If you go down, Cap Hotels also recording 9.82% there to close at 3 naira and 2 kobo per share. Sham PLC as well gained 9.38% to close at 1 naira and 40 kobo per share. Let's look at the losing equities. Of course, the top one, John Hott, leading the chart there. 10% it lost to close at 1 naira 44 kobo per share. Of course, Presco also losing 9.54% as well to close at 182 naira per share. If you go down there, you have a Darcom. Of course, and not much has been heard about this company. 8.7% it lost there to close at 21 kobo per shares. Let's look at its top trading equities, largely dominated by the banking sector. Fidelity Bank, 53.4 million volume of shares is traded. Access Bank, 31.1 million volume of shares. And of course, United Bank for Africa, UBA, 26.8 million volume of shares. It's also traded on Tuesday. Let's look at the sectorial performance. As it went down, the banking sector is down 1.1%, apparently due to profit taking by key investors in that segment of the market. The industrial sector closed flat. Of course, the consumer goods segment of the market is down 0.11%. On the oil and gas sector, marginally on the flat side, though on the positive side, it closed on the day. Of course, the insurance sector, one of the biggest loser of the day, 0.71%. It ended on the day. Well, let's look at the rest of Africa. Of course, also JSE in Joburg, South Africa, down 0.21%. If you go down to Ghana, Next Door Neighbor is up 0.15%. And in Kenya, Nairobi, one of the country that is projected to grow higher by IMF this year, based on the report that was released yesterday, closed there 0.45%. On the day. Let's look at the commodity prices. Of course, this is very, very important. Of course, if you look at the prices as it is, the rice, in price of rice, then that is 100 kg bag now, it's around 85 thousand naira, while the 50 kg bag is down is about 47,000 naira. Gari 45,000, 25,000 for the 50 kg. White beans 70,000, 25,000 for the 50 kg bag. Soya beans is also there, 50,000, 25,000. Guinea corn 16,000 there as well, 9,000 there. If you look at the previous prices, there are actually, in terms of kilogram, the difference is really very wild. The maize is 60,000 for 100 kg bag. If you go down for 50 kg, it's around 34,000 naira. The wheat 30,000, 17,000, depend on the kg you're buying. Melon seed 57,000, 32,000. Of course, millet as well 26,000, 12,500. And sorghum 21,000, 12,500, depends on the kg that you are buying. If you look at it, the prices of the kilogram are also well spelled out there for you to make your informed choice. Bitter cola, for those that eat cola, is actually 2,500. Depends on the current price. Previous price there 2,500, while the current price is around 3,500 per, of course, kilogram. All the prices are actually quoted in naira. Then if you go to tomato basket, 18,000 naira, that is the previous price. The current price is about 20,000 naira, so an upward of 2,000 naira. Onions is also there as well. It depends on the kilogram that you're buying. The green pepper, carrots, cucumbers, all of these prices are actually brought forth for you so that you can make your informed decision. For those dealing in orange, these are prices. Of course, the white watermelon, pineapple, banana, avocado, apple. This is the fruit market prices for us. The live stock market is also here. The cattle is there, the sheep, the goats, chicken, and of course pigs. All of these things are actually quoted in naira. These are the prices of the commodity. Let's look at the next price that we have on our table. Of course, we have the Irish potatoes. It's a very delicious, consumable, mostly for breakfast in in Nigeria. Here is well cultivated in northern Nigeria. Carrot, cassava, ginger, onions. If you go down commodity, talk about gold. I mean, the mental prices. We have the gold, carat, diamond, of course, iron ore, silver, of course, platinum. They are all there. The prices are actually quoted there based on, of course, the kilogram. The white yam, for those who love to eat yam, per tuber, you can see the prices there. 1,000 previous, now it's around 1,500. In terms of variation, it's an increase of about 500 naira. Sweet potatoes, Irish potatoes, groundnut, all these are prices of the commodity. Go to palm oil, 25 liters around 8,500. The rubber to over 2.1 million there. Previously it's around, still within that range, but again, imagine an increase of about not up to 10,000 naira. Honey 50 kg, 50,000 naira previously, but now it's down to 45,000 naira. So sugar is a bit high now, 48,000 naira current price. Previously, it was around 35,000. What about inflation? The PMS market, of course, 16.7% previous inflation. The current one, not currently on there, or diesel 900, 750. So these are some of the prices of the commodity available now in the market. But now we're going to take a very quick break now. When we come back, we're going into our discussion. Now, the discussion today, we're looking at the IMF report that was released yesterday in faraway Rabat in Morocco. Their report lowers the growth forecast for Sub-Saharan Africa, and of course, Nigeria was downgraded from 3.2% to 2.9%. Don't go away. When we come back, we'll go into that discussion. Glad to have you back. It's still Business Daily right here on Trust Television. Now we go quickly into our discussion like we told you before we went on that short break. The International Monetary Fund yesterday released its report and it lowers the growth forecast for Sub-Saharan Africa downward. And of course, Nigeria was particularly downgraded from 3.2% its earlier forecasted, to now 2.9%. Downgrade right now as it is now. I have joining me now from Johannesburg, South Africa, an investment trader and chief founder, Herenya Capital Advisor, Mr. Petri Redelinghuys. Good morning, Mr. Petri.
Good morning, and thank you for having me.
Oh, yes, good to have you. And later on the show, we hope to get the group business editor of Media Trust Group, Sunday Michael, who is covering the IMF event down there in Morocco. Quickly, let's start with Mr. Petri. Hello, Mr. Petri. Let me get your quick assessment of the IMF report yesterday.
Well, good morning, firstly. And I think not really too surprising. The IMF really kind of downgraded a large number of economies. Obviously, Nigeria's economy was downgraded by some 0.3 percentage points. The previous forecast that they had was that economic growth for 2023 would be somewhere around 3.2%, and they've downgraded that now to 2.9%, citing that lower oil output as a result of extended maintenance that has to be done on some of the oil production facilities that you have, is a result of this, as well as I guess slowing demand for goods and services as inflation continues to be an issue. This is not unique to Nigeria. However, we see that they've downgraded the entire region, as well as Sub-Saharan Africa, as well as developed economies, really just citing that inflation is a bigger problem than what most people realize, and it's starting to impact consumer behavior and demand for goods and services, and therefore their overall expectation is that economic activity should slow down on a global scale. So for example, if you look at Sub-Saharan Africa, this was also expected to decline by actually to 3.3%, and the expectation was for it to grow by something like 4%. So there's quite a big change in that. And in advanced economies as well, it was expected to slow from 2.6% to 1.5%. So quite a big adjustment across the board here. The primary reasoning behind this is the pressures that higher inflation puts on global economies. With Nigeria, I think just adding to that is that oil production has been slightly lower in recent times due to oil fields being maintained, and therefore, reducing a little bit of output. The good news is, though, that it is expected to pick up again from next year, particularly in Nigeria, is expected to kind of accelerate back to this, I think it's 4.8% next year. So it's really sort of just a temporary thing, at least from their expectations.
All right, Mr. Petri, what do you think is the measures, or what measures do you think IMF used to actually come up with these reports, despite the fact that there are quite a whole lot going on the continent, particularly in South Africa? It's only projected to grow just by 0.9% this year.
Yeah, so I think they obviously have a very large and complicated model that they use to make these types of forecasts. The stuff impacting South Africa is probably more electricity supply and the impact that has on our economy. As you know, we're struggling with being able to keep the lights on 24 hours a day, right? The load shedding has been a thing for the last 15 years in South Africa. So there's a lot of different things that go in there. They look at sort of the health of financial markets. They look at the health of credit demand. They look at money supply within the system. So there's a lot of different things that they look at that goes into the model. It's a fair bit more complicated than what I think any of us can really understand, right?
All right. Let me talk to Mr. Sunday, who is Rabat there in Morocco, covering the conference. Hello, Mr. Sunday.
Good morning, Yusuf, and good morning,
Okay,
viewers. I'm
Mr.
actually
Sunday,
at
you
Marrakesh.
covering the events there. Tell us, how does this report come to you? What models do you think IMF is using to rate the African countries the way it did in this report?
Remember, particularly in the case of Nigeria, one of the biggest economy in Africa, we have had a currency redesign impact on the economy earlier on in the year. And usually because of the political activities, what investors do is to stand and wait or wait and see kind of effect to see who comes in, what has antecedents, what has track record, is he a business-friendly president, and all of that. So that created some kind of law in our economy. And when it took off with reforms that in themselves have sort of suppressed a lot of activities. I mean, he removed the fuel subsidy from day one, and the impact of that on energy. I've seen prices hit rooftops in terms of inflation, and that is taking a great toll, on the economy as a whole. And at the same time, we were looking at the unification of the exchange rate. As of today, I hear from home that it has touched 1,035 in places like Abuja and Lagos. You can imagine what that impact is. So it has sort of slowed the pace of the economy as people try to catch up, as people try to recalibrate. And these are taking an impact on the economy, essentially. So when they mentioned reforms and they mentioned the currency redesign, which sort of impacted the economy generally, you understand why they have to limit their expectations of the Nigerian economy.
All right, Mr. Sunday, still staying with you. When Nigeria started this reform, IMF was one of those global lenders that did say that Nigeria is taking the right decision. Now we are actually in the midst of it right now, and they are coming up with a downgrade of our growth forecast. Is that not more like a double standard? Or they've lost confidence in our economy within a very short time?
Yes, but you will recall that the IMF and the World Bank, and indeed a number of rating agencies have been speaking to these things for a very long time. We probably are doing now what we should have done a long time ago. There is always going to be this effect whenever you take these actions, but maybe the impact will not have been as heavy as it is right now, where we have to get a lot of things going. You have a president who is pro-market, and you can see how the equities market have responded to some of his policies and decisions. On the interim, they will cause pains, obviously. The question is the amount of communication we get from our own government. How long is this going to last? How long until we begin to come out of the woods? That's the amount of communication we are not getting right now. And how much of impact assessment has this government been able to do with regards to taking these decisions? When we take these decisions, what immediate impact would they have? What medium-term impact would it have? And at what point would Nigerians begin to see real gain? Because the truth of the matter is, the CBN, for instance, spent over $5 billion intervening in the market to keep prices at what they were before this government came in. So the question now is, are we going to continue to use 5 billion of our common resources to support a market and support people's lifestyle in terms of whether importing perfumes or importing champagne in the country, or we take that money and put them in these sectors of the economy that would have impact on everybody? These are the kind of communications that we expect from the government, from the central bank, from the government, that would help everybody realign priorities and say, oh, okay, this is why we are making this sacrifice, and this is what we hope to look up to. And they who look, whatever they hope to look up to will help them manage difficulties on the immediate step that comes with this decision.
Yeah, all right, Mr. Sunday, what reaction are you getting from Nigeria's delegation attending the conference? Are they satisfied with this downgrade?
Well, there is nothing we can do about it. If we were to realistically rate ourselves, I'm sure we would have reviewed some of the projections we had at the beginning of the year. But sovereign countries would naturally not tell you that things will go bad. They have to keep hope alive. And so it is natural to understand that the federal government expectations or ratings may be 100 or 1,000 basis points above where the IMF had kept it. But you have seen the way rating agencies have reacted to us. Some of them dropping us ratings, and every other thing takes its ratings from there. So I don't think realistically that this rating drops came with a surprise. But the good side of it is that they have shown that we will peak from 2.9% to 3.1% in 2024. So it means looking forward, we hope that when some of these reforms take proper root, we begin to see the results that things will pick up for the economy.
All right, let me go to Petri now. Petri, if you can hear me, let's look at the IMF report. Go further. Kenya is the only country that is expected to enjoy about 5% growth this year. That is according to IMF, from 4.8% that it were in 2022. And Tanzania, and of course Senegal, are also expected to experience higher growth. What do you think these countries are actually doing to attract this kind of rating from IMF?
I think those countries are also remarkably, substantially smaller than some of the bigger ones, right? So I think if you look at the GDP comparisons between someone like South Africa and Nigeria versus a country like Kenya, Kenya's quite a bit smaller than what the larger African economies are. So I want to say that it's easier to grow from a lower base, right? If the movement from 1 to 2 is considerably bigger in percentage terms than the movement from 2 to 3, for example. So I think that is a fair amount, of that influence. We've seen this as a phenomenon that emerging market economies generally grow considerably faster than developed market economies, right? And that's just because there's more room for growth. There's a lot more people moving into the middle class. There's a lot more development taking place as the emerging market countries catch up to the developed market. So that's one sort of base assumption that we have to make. But we also have to look at other things where, we see that those countries are relatively stable and relatively well run, right? And they are managing to increase the service delivery to their populace in a very big way, and they're enjoying the benefit of good policy and good economic growth. So I don't think that they're doing anything, so to say, better or worse than anybody else. I think that they just are growing at a good pace, but from a smaller base.
All right, Petri, still staying with you. If you look at the rating, Angola appears to be the worst hit. It is down. If you look at the April projection by the same IMF, it was around 3.5%. Now, that growth has been lowered to just a mere 1.3%. You are in the Southern Africa, and Angola too is a country in that axis. It is an oil-producing nation, country at that. Tell us, what do you think is the implication of this on the larger economy of a country like Angola?
Look, I think it's just a sign of the times, right? I think that again, I'm going to lean on the global projections here as well. We are sitting in a situation where, there's global conflict, particularly food security is an issue for Africa. So a lot of the grain and the sort of staple foods that we receive or import into Africa, the prices of those things are going up drastically, right? So people have to prioritize where they spend, whether or not that's going to be on essentially feeding their families and housing and the like, or on other things where we could enjoy expanding industry. So, for example, the textile industry, people might buy less clothing in exchange for food, right? Because prices of food is going up. So I think that what this is a sign of is that we're in for difficult times, and this has been the case, I think, for some time now, ever since the conflict sort of erupted in Ukraine. And if we look now at what's happening in the Middle East with Palestine and Israel, that's probably going to push the energy prices, oil prices, up significantly, right? Which is going to worsen the inflation problem, and it's going to be even more impactful to emerging market economies, well, all westernized economies really that are dependent on oil imports from the Middle East. And let's face it, the Middle East produces the majority of the world's oil, so it's absolutely going to impact everybody in a very big way. And what's going to happen is, if the price of fuel goes up or petrol goes up, it pushes the price of food up, it pushes the price of everything up, really.
Right.
And we, as a consumer, then have to become a lot more discerning about where and when and how and what we spend our money on. And that means that small businesses in the entertainment industry, for example, or in the travel industry, or manufacturing industry, making furniture and that type of stuff, all of these businesses are going to be negatively affected, which of course will slow down economic activity, as people have to really just prioritize on their spending on essentially staying alive and feeding their families, right? So this is, I think, what the primary impact is, and I don't think that this IMF report even considers, the factors that happened over the weekend. I mean, it's very, very fresh. So I'd be quite keen to see.
All right, Petri. Let me bring in Mr. Sunday. Let's give him 30 seconds. Hello, Mr. Sunday, if you can hear me. Tell us, how would this rating in any way affect the foreign direct investment that we so much desire in this country?
Well, remember the ratings are of events that have happened already. As Petra said, the things are happening weekly, and the next set of ratings should be able to capture some of the reforms that are taking place and how much that has gotten investors' confidence. But more importantly, we also have to do things locally that would improve our positions, our net dollar earning positions. Remember that we did a report from our end that showed clearly that we missed out on about 144 million barrels of oil in terms of production shortfall. So we have a quantity shock. There's so much going up. Prices are beginning to hit the $90 region prior to the current crisis between Israel and what's happening in Gaza Strip. We have the Russian-Ukrainian prices there. These have impacted oil prices. But the question is, have we taken advantage of that? We are still suffering from quantity shocks, and we have not taken advantage of those prices. In that shortfall alone, we can bring in so much dollar to, first of all, stabilize the dollar position in Nigeria, and then begin to signpost positive times, conditions that in themselves will put us in a better position to attract people to come.
All right, Sunday Michael, Group Business Editor, Media Trust Group. I must thank you for your time there, joining us all the way from Rabat there in Morocco, and of course Petri Redelinghuys, founder, Herenya Capital, and investment trader all the way from Johannesburg in South Africa. I must thank you both for your time on Business Daily today. And with that is a wrap on the show today. We'll be back tomorrow. I am Yusuf Akugu.